Hello, Arizona, and thank you for downloading this episode of Valley of the Sun Real Estate Show. I am your host, Jayson Bates, the lender who's been known to take a turn down and turn it around into an approval. And today, we're going to jump right into this topic here because I got a lot to cover on this good faith estimate. And I'm hopefully going to help you understand the good faith estimate. 2010 with the Dodd-Frank Financial Reform Act and the changes that were made in the disclosure process when obtaining a mortgage loan, the good faith estimate was revamped and categorized, I guess. Not really categorized, but just kind of redone. And so it can be a little confusing if you haven't seen a good faith estimate, or maybe you have one and you're not quite sure what the numbers really mean and what to look for on the good faith estimate. So in this episode, I'm hopefully going to be able to go over that with you and help you understand what is in the good faith estimate and what it all entails. And certainly if you want to reach out to the show, or if you'd like for me to take a look at your good faith estimate, by all means, email me at valleyofthesunrealestateshow@gmail.com or call me directly at 602-573-3101. So let's go ahead and jump right into this. And if you're watching me on YouTube, I am going to do a little something different here. I'm going to try to pull up the good faith estimate here so that you can see it, so I can walk you right through and point exactly to what I'm talking about. Now, if you're downloading this on an iTunes or my podcast, then I'll try to be as descriptive as I possibly can so that you can follow along that way as well. So hopefully this will work out here for you. And like I said, if you have any questions or have any concerns or anything about your good faith estimate, by all means, reach out to me. I'd be happy to go over it with you. And again, you can email the show at Valley of the Sun Real Estate Show @gmail.com. Easy for me to say. Or you can call me directly at 602-573-3101. Okay, so let's jump right into this here right now, and let's take a look at the good faith estimate. And so when we talk about the good faith estimate, there are a couple things here there are a couple key points on the good faith estimate. So I'm going to go page by page here on the good faith estimate so that we can really dial it in here for you. So now you should see on your screen here, if you're watching this on YouTube, you should see the good faith estimate, page 1. This is just a blank good faith estimate. And as a lender, we are required, once you create an application, we are required by law to send you a good faith estimate within 3 days of you completing that application. Very important that you get this within 3 days. If you are somebody who hasn't received your good faith estimate and you believe that you have created an application with a lender, then that lender is in violation of the Dodd-Frank Financial Reform Act. So you may want to reach out to them, or you may not want to reach out to them. You may want to just move on to another lender at that point. So the mortgage rate and the good faith estimate, you on the first box here, the top of the good faith estimate, you're going to see the name of the originator, which is the lender. You're going to see the address, the phone number, the email, all the contact information. You're also going to see your name, the property address that you're wanting to purchase or refinance, and the date of the GFE. And this is all part of the header, if you will, or the header box of the good faith estimate. And then just below that, it's going to be the purpose of what you're trying to do, or the purpose of the good faith estimate, if you will. And then shopping for your loan. It always puts on the good faith estimate. It's always a good idea to shop for the best terms and rates for your particular situation. So it does encourage you to shop to get the best deal. And I'll point that out on page 3 too, where you can kind of compare notes on that. And then there's the important dates box. And that's just below. It's right about in the middle of the good faith estimate. And on line number 1 there, that is going to be the date in which the good faith estimate is good through. And typically that's the same day that you get the good faith estimate. And the reason for that is because interest rates change, and they change sometimes hourly. And so the good faith estimate is only good for the time that they disclose or send that good faith estimate to you. So if you want an updated one, you'd have to call your loan officer and kind of have him or her walk you through that and kind of quote you new rates. Certainly they could even provide you with an additional good faith estimate if you so chose. But that's important there, that important date, line number 1 there, of when it's good through. And then all the line number 2 there in that particular box there is the estimate for all settlement charges available through date Again, that's typically through, today's date or the day that you get the good faith estimate. And then it'll also tell you how many days you have to lock your interest rate in and how many days you must lock in the interest rate before you can close on the loan. So those are important dates that you want to keep in mind when you're looking at your good faith estimate. Now, just below that is the summary of your loan. And the summary of your loan is an area in which the key terms of your loan and describes whether your good faith estimate is a fixed rate or an adjustable rate one, or adjustable rate mortgage. They also include the loan size, the loan term and the years, the loan's initial interest rate if you're on an adjustable rate mortgage. And it also answers the question, can your interest rate rise? If it can rise, on a variable interest rate, or if you're on a fixed rate, of course it wouldn't rise. So those are the things you want to look for in that particular box of the summary of your loan. And then just below that is going to be your escrow information. Now, some people elect to not have escrows on their mortgages. Most people do have an escrow account included in their mortgage payment. So if you have an escrow account, that would be all outlined on the bottom of page 1 of the good faith estimate. And then just below that, it's going to be a summary of your settlement charges. It's going to be your adjusted origination charge, which is going to be box A. And then in box B is going to be all other charges there of your settlement services. So that kind of describes their page 1. So it's kind of an overview, if you will, of your loan in that regard. And then on page 2 of the good faith estimate, it's going to go into your closing costs and what's required for you to close and have your escrow impounded. And these are all labeled as settlement costs on the good faith estimate. And this is on box number, let's see here, box number 1 is your origination charge. Now, the origination charge is going to include any charges that the lender charges to originate your loan. It's not just the origination point, if you will. It's the sum of all the loans to originate the loan. So if there's an underwriting fee, if there's a processing fee or an application fee, that's all going to be lumped into box number 1 right here and put over to the side. And then so when somebody says, a lot of times I'll say, hey, there's no origination charge, there's no origination points. Used to be, before this change here in the good faith estimate, you would always refer to origination points when doing a good faith estimate. Now it's an origination charge. There's really not any points. Although you can charge points, lenders are, able to charge points. But typically in today's environment, most lenders don't charge points unless they're using the points or you're using the points to buy down the interest rate. So the origination charge is kind of the lender's fees, if you will. And some may call them junk fees, but there are fees that we have to charge in order to employ the underwriters, the processors, and some of the other faculty members, if you will, that help facilitate a smooth transaction for you. So that's all going to be in box number 1. And then the second part is going to list the accompanying discount points, the charges for the interest rates. That's all going to be like in box number 2. And that's where I would say the discount point, as I mentioned before, would be disclosed, is in that box number 2 of whether or not you're using any money or any points to buy down that interest rate. And hopefully if your lender is being a good loan officer, they would tell you that before you got this good faith estimate, so you wouldn't be shocked, if you will. And then box A right here, I know I'm saying here, and you can't see me if you're listening to me on a podcast, but box A is going to be the total of box 1 and 2. And then that box A carries over to page 1 at the bottom of the good faith estimate. And then on page number 2, continuing on here with page number 2, is your charges for all other settlement services. If there's any other types of non-bank related charges that you expect to pay in conjunction with your mortgage, you're going to see that in this section here. So any title fees, settlement fees, prepaid mortgage interest, all those sort of things, those are all going to be in this box here, or in this section here. And it's pretty well outlined. Required services that we select, it's going to have title service in there, the lender title owner's policy, the lender's policy in box number 4, the owner's policy in box number 5. And then required services that you can shop for. These would be like your homeowner's insurance, maybe home warranty might be in there, that sort of thing. But that would be in box number 6. And then government recording charges, that's going to be the recording of the deed of trust. That's typically in box number 7 there. If there's any transfer taxes related to your transaction, that would be in box number 8. And then the initial deposit for your escrow account, this would be the amount that would be paid up front. It's not your escrow and what you put down when you purchase the home or when you went under contract. This is going to be the amount of impounds that we would hold back when you close on the loan. Typically, it's about 2 to 3 months on a purchase transaction of taxes and insurance. That would all be included there in box number 9. And then box number 10 is going to be your daily interest. This is going to depend on when you close. If you close at the end of the month, you're not going to have as many days of interest. If you close in the middle of the month, you're typically going to have 15, 16 days worth of interest. And then if you close at the beginning of the month, you're going to have 20, 30 days of interest reflected there in box number 10. And then here, homeowners insurance, that's going to be your property insurance that you can shop for, actually. That would be in box number 11. And typically that, if you bundle your insurance with your cars and stuff like that, that would be reflected there in box number 11. Now, a lot of times that is kind of that's really subject to change there, because that box there, we don't know, even you may not even know who you may use for homeowners insurance at the beginning of a transaction. So a lot of times that's an estimate. And it's important when we talk about the good faith estimate, even though I try to be as exact, and all lenders have to be as exact as they possibly can with the good faith estimate, it is still an estimate. And things can change in this estimate. There are just certain time restraints that we have to follow if things do change. So it's also important note here on the good faith estimate that we tend to over disclose as lenders now rather than under disclose. And we over disclose because if we under disclose on your loan and we send you that paperwork and you go to the closing table and it ends up being more than what we disclosed, then we have to pay that difference. You could hold the lender accountable for that difference and make them pay that difference. And I don't know too many lenders out there who are in the business of paying people to purchase homes. So they tend to be a little over disclosed when it comes to some of these fees here. So that takes care of page number 2 on the good faith estimate. Now, page number 3 here on the third page of the good faith estimate explains what page 1 and 2 say and provides instructions on comparing loans between multiple mortgage lenders. It also includes a listing of mortgage-related fees sorted by whether they're allowed to change and by how much. So in this section here, there are some fees that we do have a 10% tolerance in as a lender. And so that's what I was saying about that homeowners insurance. That's really kind of arbitrary right at this point, because you don't really have it picked out. It's really subject to change. So that's a fee that could change throughout the process until you determine which insurance company that you would like to use. So then that's a 10%. It's a 10% tolerance on that. So it can't change by more than 10% on some of these fees. That's what page 3 is going to go over. It's also going to go over the mortgage rate and discount point combination, good faith items which cannot change, increase at settlement include your lender's origination charge and your mortgage rate, and once your mortgage rate is locked. So the page 1 there on the good faith estimate, we can't change the origination fee, we can't change the discount points, can't do any of that once your rate is locked. Now the discount point can change up until you lock in your interest rate, because again, interest rates change daily, sometimes even hourly. So that's something that we want to watch, and we want to watch the markets for. If you're kind of right at that point where you're buying down that rate and it's just right at your threshold of what you can afford, then you probably want to lock rather than wait. And I have had episodes in my prior podcasts on when you should lock in your interest rate. Even did a YouTube video on that. So do check out my YouTube channel, YouTube/the Jay Bates, and you can find that video there. Now, charges which can change at settlement in this section here, and this is part of the good faith estimate here on page 3, understanding which charges can change at settlement. There's a couple different boxes here. There's charges, required services that you can shop for, like the insurance, like I talked about, title services that the lender's title insurance. If I say we're going through Stewart Title and you end up going through American Title, then those fees can change. So it depends on the title company that we choose. The fees can vary just slightly. Owner's title policy, that's really kind of something, I don't know if it's unique across the country, but it's really something here in Arizona. An owner's title policy is basically a title policy that you as a buyer have access to, or you can get, that will tell you the entire history of that particular property, from the dirt, from it being dirt to it being built. So if you want to know if Clark Gable lived in the house, you could get a owner's title policy that would tell you any and everybody who's lived in that property and owned that property. Those can be, we do have some actors and famous athletes and things like that that live here in Phoenix. And sometimes that can be kind of a novelty item that people want to know. And so they ask for an owner's title policy in that aspect. And you can see who's lived in the property. Now, it doesn't change anything. It's just for your own information. Most people say, hey, look, as long as I own the property, I don't care who lived in it last year. Care less. It's mine now, so that's all I care about. So it's just, owner's title policies are pretty expensive. You as a buyer don't have to pay for them. The seller pays for them. It's part of the seller's closing costs if you elect to waive your right to the owner's title policy. And the initial deposit for your escrow account, that can change because, again, the taxes and insurance can vary because we don't necessarily maybe have a property tech picked out, or we don't have the homeowner's insurance agent picked out yet, or the actual coverages that you need are required for the homeowner's insurance. And then the daily interest charges, depending on when we change or when we close, that can change. So, we may end up closing early in a lot of cases, in which case then you might have some changes there to your daily interest. And then, like I said, too, the homeowner's insurance can also change there. Those are the things that can change. They're not bound by the 10% rule. The things that can change that are bound by the 10% rule are the services that we select. So if you select a title company, it can't change by more than 10%. Owner's title policy, that sort of thing. And the recording of the deed of trust here in Arizona, that can't change either by more than 10%. So what a lot of lenders do here when we get the title fees is when we get your contract, or if you're doing a refinance, we'll call the title company and we'll present to them the loan amount that we need or that we're going to be financing. And then the title company will give us a list of their fees in relation to that loan amount. And then we transfer those onto the good faith estimate and the HUD settlement statement. So that's kind of transparent. And a lot of times I'll even send what I get from the title company straight over to the borrower so they can see that there's no smoke and mirrors, if you will, when it comes to these fees, because they are what they are. There's nothing we can do to change them. They are third-party fees, and it's really kind of, my hands are tied when it comes to those things. Now, just below that is the use of the trade-off table. Now, the trade-off table is there to help with discount points and comparisons to the discount points. And so, what would the payment be if you didn't have a discount point versus what would the payment be if you did have a discount point? How long would it take you to recoup those costs? That sort of thing. That's what the trade-off table is for. It's just to give you a comparison of what the different options may be when looking at discount points if you elect to have a discount point versus not having a discount point. So that's what that table there is for. And then the last thing here is using the shopping cart. Now, in this scenario here, this is to assist you as the applicant who are shopping for a mortgage. This is a template that will put everything on equal terms with one lender to another. And you can write in here and put whatever you want in here as you call and shop around to get the best loan program or best deal for you. And that's what page 3 is there for on the good faith estimate. And then just below that is going to say if your loan is sold in the future. Some lenders do sell their loans, servicing rights to other service providers. And so there may be fees involved with that. And if there are, it would be just notifying you that there may be a fee for that. Typically, I've never seen a fee for that. I think it would be kind of silly for a fee. And quite honestly, you can't, the lender can't charge you the lender cannot charge you or have in the good faith estimate, can't show, I shouldn't say show, they just can't charge you. They can't charge you any fees for transferring your loan in the future. That has nothing to do with you. That has no bearing on you whatsoever. So there are no fees, and there's a statement on, that's what the statement is at the bottom of the good faith estimate, that the lender, there are no fees associated with transferring your loan. Lenders do reserve the right to transfer the loan, but there are no fees associated with that. And then that's pretty much the good faith estimate. So that's page 3. That's the final section on page 3 there. So with that, that's the entire good faith estimate. I hope that kind of clarifies some things there for you and what to look for and how to kind of read it. One thing that's interesting to note here on the good faith estimate is that the good faith estimate no longer requires a signature, which is pretty strange, because before it required a signature. And today's environment, the good faith estimate does not require a signature, so it's kind of strange. It's there for informational purposes only. It's not there for you to sign and be bound by. But there are key dates on there. The lock on the interest rate, that's very important. And it's also important to note here, I didn't mention this before on this key dates. Once your interest rate is locked in, you're going to receive another good faith estimate, making you aware, letting you know that you are locked in at an interest rate at whatever that may be, and for however many days that may be. Typical lock period is 30 days. So if you're locked in your interest rate, it'll typically say 30 days, but you can lock up to 6 months on an interest rate. Not many people know that, but you can lock up to 6 months on when locking in the interest rate. That works really well if you're purchasing a new home and the rates are really, really low and you anticipate that they may be going up. I think that probably is going to become more of a prevalent type option for a lot of people since interest rates are really, really low here in December 2014, and they're anticipated to go up. So I anticipate that option becoming more and more popular. So that's a good faith estimate in a nutshell. I hope I put it in layman's terms and hope you can understand and follow along on the good faith estimate. And certainly, like I said, if you have any questions at all, by all means, reach out to me, Valley of the Sun Real Estate Show at gmail.com, or call me directly at 602-573-3101. I'd be happy to help and go over any questions you have or address any concerns that you may have. And certainly, if you want me to talk about any other type of topic, by all means, reach out to the show. I'd love to hear from you. Thank you for listening, and I look forward to hearing from you soon. Take care. Bye-bye.